From the floor of the CME Group, this is Danny Riley on today's Cash Close. The name of this video is one of our trading rules. It takes days and weeks to knock the market down and only one to bring it back. The high of the day in the S&P came in at 1940.80 mid-morning. The low came in at 1932 even just now, and last we're 1932 half. We're up 8.8 handles. Total volume 1.2 million minis trade and 2,000 big S&Ps trade in the pit. MOC, we had 40 million to sell. Tomorrow we've got the NFIB Small Business Optimism Index. We've got the Redbook, we've got the Jolts number, we've got a 3-year note auction, and we've got the Treasury Budget number. Now look, let's talk a little bit about the pit bulls Thursday, Friday low. Now we know that the low came in on Sunday night. Remember I talked about a little bit about that we tend to see these lows on Globex on Sunday nights. Well, we've seen a lot of them, and I think you really got to pay attention to that. But the other part is the basic trading rule that we just talked about this morning, or just now, that it takes days and weeks to knock the S&P down and only one to bring it back. Now, it's really true. I've been watching this for a long time. What happens is you get all this pent-up selling, and everybody gets short into a decline, and in this case, into a decline under 1,900 in the S&P, and then the futures open above that level, and then they start taking out buy stops. And then a day and a half later, really it was only a day and a half later, the S&P is up a total of 50 handles. That's where that rule comes from. And a lot of that is what has got a lot to do with the news and the S&P being oversold. But at the same time, again, I want to reiterate something. I'm not convinced that the S&P is going down. I think we've already had our correction. I can't rule out what the Russians may do over the next couple of days, their humanitarian mission. But at the same time, I get the feeling that the S&P wants to go back up. Now, today we started talking about a critical level at 1940, and we got a little bit higher than that, but then the S&P started selling back off. It rallied a little bit midday, and then it started selling off right after the cash imbalance came out. Now, there's a lot of Russian risk out there right now, and especially after a 50-handle rally in the S&P. What I think is going to happen is the statistics are a little weak tomorrow, and then they get for the August expiration. Then they get better on Wednesday, Thursday, and they're better on Wednesday, a little weaker on Friday, then good on Thursday, and then good on Friday. Excuse me, I've got a lot of mess ups here. But that said, throughout the gist of this is that the expiration itself is to the upside. I'm going to leave it like that, you guys. It was a quiet day, and there's not a lot to talk about. We'll see you tomorrow on the opening print.